BiggerPockets cleans house. Is this a sign that they are going back to the basics? Is this a sign that they got wayward in their stories and inspiration? Have they just de-risked potential lawsuits? I don't think any of us actually know, but it is very clear that they have dismissed certain creators. They have also had past relationships that they said they were no longer push. I know this because these creators are friends of mine and we have talked over the last 48 hours. Folks, if you don't know, if you haven't seen Millennial Mike, the one and only part of the Avengers, Millennial Mike put out an awesome video. I believe it was Friday, talking about the 5 reasons he believes that BiggerPockets is cleaning house and resetting. I want you to watch the video, but I will give you his 5 rapid fire reasons. He goes into a lot more detail. You need to watch this. Number 1, BiggerPockets has fired long-term hosts. Number 2, non-stop selling. Yes, they have gone from that Josh Dorkin in the basement to a education and content company. Number 3, there are other YouTubers coming up in the platform offering alternative views. Number 4, the market is brutal. And then finally, they are no longer relatable. They have lost the focus on the small folks getting started. Also, on top of that, it looks like One Rental at a Time was called out by one of these content creators. I'm going to do an emergency live stream at 8 a.m., so in about 28 minutes. And we are going to lay out what my thoughts are on that attack. Again, it is very interesting. I think there's a lot of truth in that discussion, but I just thought I would share my notes with you, let you know what I thought of the feedback on One Rental at a Time. I'll let you know what I agree with and, of course, what I disagree with. I don't think it was very nice at what was said, but hey, we will go through that in the live stream. This is the daily financial news. So, folks, let's get into it. The economic news next week is important. Obviously, a lot of us have been hearing people call for rate cuts. Rate cuts. We are going to get a lot of data on Tuesday and Wednesday that will either make rate cuts a layup or point to the dreaded pause and push to November. It starts on Tuesday. Tuesday, we will get PPI. This, of course, is wholesale inflation. It is obviously an inflation that comes through to consumers. It is not a direct one-to-one because, again, margin can be compressed at the retail level. Expectations for headline and core month-on-month are kind of a benign 0.2. Both are expected to be 0.2. Again, anything above 0.2 could potentially push rate cuts to November. Now for the big one. PPI is kind of important. CPI is the important one. Again, so we got to go through what the expectations are for headline in core, month on month, year on year. We're going to go through 4 numbers. So we're going to talk about, we'll do month on month first. Headline month on month expected to be 0.2. Last month was negative. Last month we had deflation. Last month was negative 0.1. Again, anything above 0.2, bad. What about core? Again, core is expected to be 0.2. Last month was 0.1. So again, going up. Now let's talk about the year-on-year number. Let's talk about the one that will be quoted all over the news Wednesday and probably into Thursday. That is headline. Headline is expected to be 3. Last month, it was 3. I am unfortunately concerned that this might tick up. This might go up to 3.1. If it does, I'm not saying it will, I'm just saying if it does, you have to imagine it's really hard for the Fed to cut. Why is that? Well, the story of inflation getting better is wrong. It is over. And again, if you go from 3 to 3.1, I don't think the Fed can cut in September. If we go from 3 to 3.1, I think the chances of a rate cut in September go down significantly. So that will be a very, very important number. Well, let's go back to core. Core year on year is expected to be 3.2. It was 3.3. So, like headline, if core goes up or beats expectation and is flat, or worse, goes to 3.4, again, I believe the Fed will have a hard time cutting in September. So Tuesday and Wednesday are barn burners, must pay attention. The data, if you want to watch it, comes out at 5:30 a.m. Pacific, 8:30 Eastern. Then, folks, on Thursday, we will get two very important numbers. We will get the follow-through initial weekly jobless claims. Again, remember, last week it came back down from 250 to 233. There was a lot of talk about the previous week being impacted by a hurricane in Texas. So far, that seems to hold, but we need validation. A single point is just that, a point. We need a trend. So again, it is 233 last, expected to be 235. Any number below 235, again, it's hard to believe that the Fed will cut in September. The job market is not falling apart. If we go back to 250 or 260 or something like that, the chances of a rate cut in September go up significantly. Not to be outdone, Thursday we also get retail sales. What is going on with the consumer? Retail sales, are we growing? Are we spending? Not. Is it going negative? I do believe last month was a 0, meaning we were flat month on month. I do not have the expectations for this month, but I should have them later in the week. Friday, we will get consumer sentiment and housing starts. What is going on with the consumer? We are obviously a consumer-based economy. It is my belief that consumers are pulling back. I believe consumers historically can pull back for 4 to 6 months when they're scared, nervous, or pissed off. I believe the American consumer is all three of those heading into the end of the year and this election. So I expect a lot of consumer pullback, but we will see in the data. On Friday, we will also get housing starts. Housing starts. What is going on with builders? Have they changed their tune? What is going on there? We got some data from Fed President Barkin. U.S. may be heading into a longer-term worker shortage. Again, what does that mean to you and me? What if the U.S. worker shortage is real? Well, folks, that's inflationary. I don't know what to tell you, but a worker shortage equals inflation. What does bringing manufacturing home mean? Well, that is inflationary. We have several larger trends in our economy that are net inflationary. Again, will the Fed eventually relent and raise their inflation targets from 2 to 3? We shall see. But again, we have some decade-long inflationary pressures coming. Fed Watch tool, as of yesterday, I did not check this morning, as of yesterday, had a 50-50 chance of a 25 or 50 in September. That is noticeably lower. As of last week, I think it got as high as 80% chance of a 50 basis point cut. It is my expectation that that Thursday jobs number is what lowered it, because again, we kind of shot up to 250, but now we're back to 233, I think was last week. I don't know if you saw this, but it looks like Delta Airlines has put a fine point on the CrowdStrike chaos. Apparently, Delta says CrowdStrike cost them $380 million. Yes, folks, that one patch or upgrade or whatever CrowdStrike did cost Delta Airlines almost $500 million. Ouch, not good. Bloomberg survey talking about soft landings, recessions, and all of that. Soft landing, 69%. 22% chance of a recession. 9% soft landing only if the Fed cuts. What else? Oh, Danielle DiMartino Booth is out in force. Again, somebody that I follow, somebody that I respect, somebody that knows the Fed. She is still calling for the She is still calling for the recession to be backdated to September of 2023. She indicates that's when job losses went negative. Again, that's almost a year ago. The Bureau of Economic and Labor and Statistics calculating recessions, just so you know, historically, early would be 9 months and late would be 11 months, right? These recession calls are always delayed. They're always late. But we're coming up on 11 months. Now, would they call a recession before the election? I don't know. I would hope they would do their freaking job. But again, it is my belief, it is only my belief that the recession actually started June of 2024. So if June or July, I've given myself 2 months, if June or July is the recession, we actually won't hear about it until March or April. So we will see on that. Wall Street Journal says 50 basis point cut in September is coming. Yeah, I don't know. I don't know. I'm still stuck on this. We're gonna go one meeting longer and cut in November. But you know what? Maybe the one meeting longer was July. Maybe they should have cut in July and the one meeting longer is there. So maybe I'm off, but I'm already standing on this rock that says November. I have no problem being wrong. I will wear the swing and a miss shirt. But yeah, I'm going to keep standing on this November 50 basis point cut. Let's see. Oh, Nick Timmeros, Wall Street Journal, Nikki Leaks, as Meet Kevin calls them, had a very, very, very interesting article. Something that you and I have been talking about for 18 months. We finally have some numbers and math. Apparently, rising interest rates have reduced mobility. In the past, you may have heard me call this turnover. Mobility, turnover, same thing. Both of these are a calculation of the move-up buyer. Again, as I've said repeatedly, the housing market's broken. The move-up buyer is gone. The move-up buyer is so important because they sell one and they buy one. If the move-up buyer is out, there is no chance transactions come up. In fact, I still believe that July might be a cycle low, perhaps as low as 3.72 million transactions. The current cycle low is 3.88, in case you are wondering. So according to Nikki Leaks, the reduced mobility, the move-up buyer, by 16%. 16%. Households that did move up, this is important, pay attention. The people that did choose to move, I want you to hear this. The folks that did choose to move saw an annual increase of $5,000. Okay, what does that mean? This wasn't in the article, but it is vastly important. Apparently, a move-up buyer, what is a move-up buyer? Extra bedroom, nicer area, newer, bigger, whatever. That's the move-up buyer. Trade this little home for a better home. Apparently, the move-up buyer is willing to pay an extra $400. 400 times 12 is 4,800. I'm rounding that to 5,000. That is important because now we know the number. Move-up buyers are willing to spend $400 a month. So, like many of you, and I have talked to thousands of you. Well, I shouldn't say talk. I have communicated with thousands of you. Direct messages, comments, all of that stuff. Many of you, if you wanted to move, your payment would be $1,000 a month, $1,200 a month. And according to Nick Timmeros from the Wall Street Journal, you're not going anywhere. Yeah, no kidding, you're not going anywhere. So we now know the number. Why is this number important? Watch interest rates. As interest rates go down, eventually, the delta, the 1,200 will be 1,100, will be 800, will be 600. At some point, you are going to get close to that now number we know of 400 and I probably should have done the math, maybe $425, something like that. $425. If you're going to move up, you are willing to spend $425 a month extra. So when will the move-up buyer come back? Well, when they can upgrade their house for $425 a month. That is, and it's extra, right? It's current payment plus $425. Alrighty, folks, that's what I got for the daily financial news. Remember, in about 15 minutes, I will be going live and talking about somebody who called me out, who called One Rental at a Time out. Somebody that had some fair things to say and someone that I think missed the boat. Went through the 32-minute video, created 3 pages of notes, and we're going to talk about all of them, the good, bad, and the ugly. I want to shout out everyone, and I got notes from probably 50, maybe 60 of you, that One Rental at a Time was called out by this individual. And we are going to talk about it in 14 minutes. Have a wonderful day. This is your daily financial news. We do this live. Take care, and bye-bye.